Next, we have the title of the next session is Mongolian Equities, the Next Frontier. To open this session, we invite Mr. Gan Ochir Doojav, London representative of the Bank of Mongolia, to present on Mongolia's economy and financial sector. He has more than 20 years at the Bank of Mongolia, previously holding several key positions, including chief economist, advisor to the governor, and Secretary General of the Financial Stability Council. Please welcome Mr. Gan Ochir.
Good morning, everyone. On behalf of the Bank of Mongolia, I would like to thank the organizers of this event for the kind invitation to present at this event. Today, I will provide an audio of Mongolian economic situation and banking sector performance. Let me start by presenting recent economic developments and the outlook for the medium term. The Mongolian economy grew by 5.6% in the first half of this year. The agricultural sector, especially livestock sector, was the main driver of this growth, contributing 3.6 percentage points to the overall growth. The manufacturing, electricity, and construction sectors have positively contributed to this economic growth. In particular, we have seen notable progress in housing, railway, hospitals, and school constructions, as well as in energy projects. On the expenditure side, GDP growth has been mainly driven by increases in household consumptions and public and private investments. However, the decline in real exports, coupled with the increase in imports, has adversely affected the overall growth performance in the first half of this year. For the medium term, the Bank of Mongolia's economic growth projections remains very strong. This year, Mongolia economy is expected to grow by 5.8%, which is projection of the Central Bank of Mongolia. This is also supported by the both mining and non-mining sectors. The mining sector is projected to grow by 8.6%, mainly due to higher production of copper and gold concentrate and the strong coal volumes in the second half of this year. The non-mining sector is expected to grow by 5.3%, supported by a recovery in agricultural sector and construction of larger projects. Over the next years, the economic growth is expected to stay steady at 5.6 to 5.8%. This outlook is based on the stable production of key minerals like copper, gold, iron ore, along with the increased investment and continued progress on major projects. Compared to the first 8 months of recent years, the current account deficit widened in these years, largely due to significant fall in coal export prices. In the first 7 months of this year, our coal export prices have dropped by more than 40%. However, the effect of the current account deficit is partially offset by a surplus in the financial and capital account of the balance of payment. This surplus has been supported by external financing inflows to the government, commercial banks, and the central bank. As a result, international reserve adequacy has remained steady during this whole year. As of September, our gross international reserves stood at $5.9 billion, which is equivalent of 6.2 months of imports of goods. This low level of reserve has also supported the overall stability of local currency. Since the beginning of this year, the Mongolian tugruk has depreciated by 5% against the US dollar. However, it has remained relatively stable since this April. Of the 8 months, inflation has remained above its target level. However, it has been on downward trend since the beginning of this year. The composition of consumer price index inflation shows that increases in domestic sales prices, including the electricity price, account for almost half of the overall inflation, which is 4.5 percentage points. And the emphasis towards inflation contributes to the 1.8 percentage points to the overall inflation. These are two main components explaining why inflation is relatively high right now. From a macroeconomic perspective, inflation has been mainly driven by fiscal and monetary expansion, exchange rate depreciation, and supply side factors such as rising energy costs and wages in both public and private sectors. Even though there are still some risks, Bank of Mongolia expects inflation will gradually decline and reach its 5% inflation target by end of 2027. At the same time, Bank of Mongolia remains very committed to stabilizing inflation at its target level. To this end, the Monetary Policy Committee of the bank has kept the nominal policy rate 3 to 4 percentage points above its projected inflation level in the recent couple of years. This implies that Monetary Policy Committee is keeping monetary policy stance tight since the if policy rate is always higher than the natural rate of interest, which is estimated to be 2 to 3 percentage points in the case of Mongolia. In addition, macroprudential policy measures have been implemented to complement monetary policy to enhance its effectiveness and support financial stability. Looking ahead, the policy environment still faces several challenges, including high uncertainty in global markets and in external sectors, as well as persistent supply-side inflationary pressures, mainly due to weather-related disruptions. Let me turn to the Mongolian banking sector's performance. In Mongolia, the banking sector continues to play a key role in financial intimidation. As shown in the aim to money growth chart, bank funding activity has been rebounding since this July. Domestic currency deposits remain the main source of the bank funding, which indicates no signs of deposit dollarization. On the lending side, the bank loan growth has been moderating since end of last year, largely due to the implementation of macroprudential policy measures targeting consumer loans. Regardless of this deceleration, our bank loan growth, mainly from business loans, remains above 20%, which is helping private businesses and supporting the overall economic activity. Here are some key indicators of the banking sector. Currently, 12 domestic commercial banks are operating, and 5 of them are classified as systemically important banks. The banking sector's total assets are 72 trillion MNT, which is about 20 billion US dollar. Total outstanding loans amounted to 42.2 trillion MNT, and of these, 58% are individual loans, while the remaining 42% are corporate loans. Among the corporate loans, primary sectors include trade, real estate, mortgage loans, and household production. Real estate, construction, and mining. For the individual loans, the major components are salary-backed loans, mortgage loans, and household production loans. Here I would like to present an overview of the quality of banks' loan portfolios and share important financial ratios of this sector. Currently, the special mention loans and non-performing loans are each 4% of total loans, which is twice as low during the COVID-19 pandemic period. But loan quality is different in each sector, and it's especially worse in construction and manufacturing sectors, where NPL ratio is above 10%. Currently, NPL provision coverage ratio stands at over 106%, and the capital adequacy ratio is close to 15%, reflecting a stable capital position of the banking sector. Also, this higher capital adequacy ratio is well above its regulatory requirement of 12%. Over the past 3 years, the profitability of the banking sector has been very strong. On 3-year average, return on assets was 2.3%, and return on equity was 21.6%, which is far above the term deposit rates in Mongolia. This high return on equity level is also on the higher end of the emerging markets, which shows returns of 15 to 25%. By mid-2023, 5 systemically important banks became the public companies by selling their shares on the primary market. This listing requirement was mandated by the 2021 amendments to the banking law. In addition to these systemically important 5 banks, Private Bank has voluntarily issued its IPOs in the end of 2021. As you can see on this slide, these 6 banks sold shares to the public and raised about 480 billion MNT in total. This amount is about the same as the minimum capital needed to set up 5 commercial banks in Mongolia. More than 72,000 investors participated in these IPOs. As a result, market capitalization of the listed banks has grown to 5.9 trillion MT, which is about 1.7 billion US dollar. To meet the shareholding requirements set on the banking law, some systemically important banks are expected to launch additional IPOs in the near future, regardless of whether or not any draft changes to the banking law are approved by the Parliament. Thank you.